Hey everyone, welcome back to Corporate Decoder, the place where we unpack the latest corporate secrets and keep you in the know on the moves that matter. Today we're diving into a bit of Whirlpool's world, and let's just say they're making some interesting decisions about their global footprint. So what is the big news from Whirlpool Corporation? Well, it looks like they've been busy selling off a piece of a key subsidiary. Imagine you own a big pie and you decide to sell off a slice to bring in some cash. That is essentially what Whirlpool has done. The company, Whirlpool Corporation, filed this specific report on the 27th of November 2025. This form, called an 8K, is a way for companies to announce major events that shareholders should know about right away. Think of it as a bulletin board for important news. Now, Whirlpool is a big name in appliances and their stock trades on the New York Stock Exchange under the ticker symbol, or you can usually find them listed right alongside other major companies on the big board. The core of this filing is about a sale that happened recently. Whirlpool's wholly owned subsidiary, Whirlpool Mauritius Limited, which we can just call the seller here, sold a significant chunk of its shares in Whirlpool of India Limited. This isn't just a small sale. It is a move that reduces the seller's ownership in Whirlpool India from 51% down to roughly 40%. So, they sold about 14.2 million shares of their Indian subsidiary on the stock market. This sale raked in approximately $166 million. The money from this sale officially changed hands on the 28th of November 2025. Why would Whirlpool do this? The report mentions that the company is looking to further reduce its stake in Whirlpool India. They have a goal to do this by the middle of 2026. And what are they planning to do with that $166 million? They expect to use it to pay down debt. That is a pretty common strategy when companies want to strengthen their financial position and reduce interest payments. This also tells us something about Whirlpool's focus. By selling off a portion of their stake in India, they might be shifting their strategic priorities. Perhaps they see better opportunities elsewhere or want to streamline their global operations. It is a bit like trimming down to focus on your core strengths. Now, buried in here is a section that is pretty standard for these kinds of reports. It is a warning about forward-looking statements. What that means is that when Whirlpool talks about their future plans, like when they might sell more shares or how they'll use the money, these are just their current best guesses. Things can change, unexpected events, market shifts, or even just a change in their own strategy could alter these plans. This little phrase is important because it sets expectations. They are saying, hey, we plan to do X, Y, and Z, but don't hold us to it completely because the future is uncertain. It is a way to protect themselves from lawsuits if things don't go exactly as planned. They're essentially saying their plans for using the money and further stake reductions are based on current beliefs but aren't set in stone. Market conditions and other factors could easily lead to delays or cancellations of these future actions. And this part here is crucial. They're also stating that they don't plan to update these forward-looking statements if something new happens. So if their plans change significantly, they might not tell you unless they have another official filing or announcement. It is key for investors to remember that these are not guarantees of future performance or actions. While the report doesn't contain detailed financial tables in this specific section, since it is an 8K focused on an event, the actual cash generated from asset sales can be a significant indicator of strategic shifts and financial health. Receiving $166 million from selling a stake in a subsidiary is a substantial amount, and it directly impacts their balance sheet, potentially reducing leverage and improving financial flexibility. It's a clear signal they are actively managing their global investments and seeking to optimize their capital structure. Looking at Whirlpool's broader market position, this move comes as the appliance industry often faces cyclical demand and intense competition. Companies like Electrolux, Samsung, and LG are major players globally. By divesting from a market where they are perhaps not as dominant or where margins are tighter, Whirlpool might be reallocating resources to markets or product lines where they see greater potential for growth and profitability. It is a strategic pruning to focus on areas that offer the best returns. One last thing they mention is their website. They say they often post important investor information there, and even use a section called Hot Topics Q&A to share material, non-public information. While it is good they offer transparency, it is important for investors to be diligent and make sure they're checking all the official channels, not just relying on website updates, which can be less formal than SEC filings. And finally, like all official filings, there is a signature section. This confirms that the report has been properly authorized by the company. In this case, it is signed by Scott J. Dorfman, who holds the title of Assistant Corporate Secretary. So what is the takeaway from all this? Whirlpool is clearly making strategic moves to manage its global portfolio and strengthen its balance sheet. selling off part of its stake in Whirlpool India for $166 million, and using that cash to pay down debt is a clear signal of financial discipline and a focus on optimizing their business. The key risks here revolve around whether their future divestment plans will materialize as expected, and if the proceeds will indeed contribute to debt reduction without sacrificing significant future growth potential in those markets. Overall, Whirlpool appears to be taking sensible steps to streamline its operations and improve its financial footing. The immediate impact of the sale is a cash inflow that helps reduce debt, which is generally a positive sign. The longer-term success will depend on their ability to execute further strategic initiatives and navigate the competitive appliance market effectively. Alright, that is our breakdown of Whirlpool's latest filing. What do you think about this move? Are they doing the right thing by trimming their stake in India? Let us know your thoughts in the comments below. If you found this analysis helpful and want more decoded corporate news, be sure to hit that like button and subscribe to the channel. And don't forget to join our Discord community for even more discussions and insights. The link is in the description. Thanks for watching, and we'll see you in the next one.